This is Crash Proof Option Selling Profits 2.0, the safer, easy way to sell options for income backed by real results built for volatility. If you've ever sold options using spreads, the wheel, iron condors, traditional butterflies, the 112, or the poor man's covered call, only to watch your account get crushed in a market drop, it's not your fault. Because that's what everyone's teaching. But today, I'm going to show you a new, easier path, one that lets you sell options for income while staying protected, even when price dives and volatility explodes. Because here's the truth, most instructors push theory and I trade with proof. I'm Karl Domm, and I've shared my Real P&L on YouTube since 2019 through the 2020 crash, through the 2022 grind down, and every market condition since then. And here's the truth. Across all my accounts combined, I've not only been profitable every single year since 2019, I've also outperformed the long-term average return of the S&P 500. And what I've learned is this: the real danger isn't the market, it's the flawed way most traders are taught to sell premium. In this video, I'll show you the exact crash-proof structure that I used, backed by data, built for volatility, and simple enough to follow without guessing direction. Before we dive in, if you're serious about building a safe, repeatable income strategy that actually held up during the 2020 crash and beyond, I'm giving away my full Safe Wheel Masterclass for free for a limited time. Normally it's $495. You're going to get lifetime access, weekly coaching, my real money trade log alerts, and a flow chart that walks you through every move. You're going to get that free today if you click the link in the description to enroll. Now, let's start by answering the big question. How exactly can you sell options and be crash proof? Well, what if the biggest risk to your premium selling strategy isn't the market? It's the structure you're using to sell premium in the first place. So back when I first started selling options, I did what most people do. I followed the gurus, spreads, the wheel, iron condors, traditional butterflies, the poor man's covered call, strangles, straddles, you name it. I did it all. And for a while, it worked. And I felt unstoppable until a mini market crash hit. You know, one of those sudden jolts with a volatility spike that tends to show up once or twice a year. Or it can get really bad, like when I got caught in a real crash, the kind that hits every 3 to 5 years, where the market plunges 20 to 30% and the VIX explodes to 60 or more. These crashes didn't just wipe out some gains. They would erase years of progress in just a week. The problem wasn't volatility, it was how unprepared my trade structure was to handle it. It was like trying to survive a hurricane in a beach tent. Most premium selling strategies are structurally flawed because they rely on high win rates but collapse when volatility spikes. The flaw? They're positive theta, which creates a short vega position. A modest spike in volatility can wipe out up to 90 times the daily theta that you're trying to collect. True crash proofing starts with understanding vega and vama and true position neutrality. And that means using delta and gamma neutral setups. It means keeping that T+0 line flat to avoid curvature exposure. It means building in long VAMA positions and proper sizing that assumes the worst case scenario, not the average scenario. Now, next, for a better understanding, I'm going to go over what I call edge obstacle number 5. Now, common level 4 options diversification strategy. So when it comes to trading options as a level 4 trader, which is selling option premium without a hedge, there's many common ways to diversify: trading different underlyings, going long and short on correlated, uncorrelated stocks, using different option strategies, credit spreads, debit spreads, iron condors, traditional butterflies, poor man's covered calls. Ultimately diversifying with a ton of complexity through many positions, but they forgot one thing. There is a kryptonite. And it's what happened in August of 2015. It's what happened in February 2018. It's what happened during COVID. It's what happened on August 5th, 2024. It's what happened in the tariff crash in April of 2025. The kryptonite: crash markets. Now, with modern crashes, all assets become correlated. So here's the crash market, March 6th to March 19th, a 2-week period in 2020. Gold was down 12%, bonds down 11%, the market down 20%, Apple Tech down almost 9, VA Defense down 62, Target Retail down 5.5, Love Retail Travel down 33, Oxy Oil down 60, Amgen Biotech down 6%. Why is this the case? The answer is leverage and algorithms. So there's so much leverage in the system that a small downturn can force deleveraging. And everyone wants to be first to get out. So the algorithm triggers panic selling, and the panic selling causes a crash and a large volatility spike. This results in margin calls and forces one set of assets to be sold in order to cover the other set of assets. And this means that no normal asset is safe. And the modern portfolio theory, the way that it's applied, breaks down because it relies on at least one asset to be uncorrelated to cover these losses. But all assets in a crash are falling, and this results in excessive losses, even with portfolios that are supposedly uncorrelated. So, next, I'm going to get into the traditional options premium selling trade structures and how they handle a crash. So let's talk about the put credit spread. So this is 1 week before the crash. This particular crash is the August 5th, 2024 crash. So this is 1 week before August 5th. So here's a put credit spread. You're trying to make $600 at 50% of the credit received. You're down over $1,500 trying to make $600. The wheel, which is really the naked put. Upside is 1135 if it expires worthless. Down 31.75, trying to make 11.35. Upside, trying to make money at 50% credit received. Down over $289, trying to make $500 on the iron condor. Here's the butterfly, trying to make $500. You're down $400, trying to make $500 in a crash. The 112. So you're trying to make $500 out of 50% of credit received. You're down over $5,400 trying to make $500. So that's the 112. So the 112 does not handle a crash very well at all. The poor man's covered call, upside trying to make $400 at expiration, and you're down over $1,400 trying to make $400. So you can see how a crash overpowers the edge, and I just quantified that with these trade structures. The premium selling Achilles heel. So the black swan events, these events can be challenging to predict, and they can lead to significant losses for option premium sellers. Margin calls. When an option seller forces significant losses due to tail risk, right, they may be required to provide additional capital to cover losses. And so you're forced to go liquid or sell your positions at the worst possible moment. And one bad trade, right? You have one bad trade and it wipes out months or years of all of the hard work that you've done to try to make money selling premium. So high returns means nothing if you're living with a constant anxiety and sleepless nights. Why build a 40% return strategy if a crash wipes it out in a day or two? So recap, edge obstacle number 5, market crashes can cause a 40 to 60% drawdowns in a portfolio that applies inefficient trade structures when you're trying to sell premium. So what to do? To be truly crash proof, stop relying on trade structures that promise high win rates but have no real protection. Start using delta and gamma neutral strategies with long VAMA for structural resilience. So you might be asking, what's the system and how can I apply it? While most traders try to piece together a strategy like building IKEA furniture without instructions, there'll be parts everywhere, nothing fits, and eventually they give up and settle for good enough. And I know because I did it. And for years, I duct taped together every options tip I could find: the spreads, the wheel, the iron condors, the butterflies, the poor man's covered calls. And I thought more trades meant diversification and more safety. But what I got was too many positions to manage, which led to more confusion, more stress, and no consistent edge. And I did that until I realized real protection only works if the system is simple enough to stick to and easy to manage. And simple means the right structure. It was like being a pilot handed a cockpit full of buttons with no training. Every time the market moved, I panicked. Should I adjust? Should I hedge? Should I close? The market was in control, not me. And that's when I realized I needed a simple, single structure to manage with a rules based flow. It's like the autopilot switch that simplifies all the instruments. I had to stop trading many different setups and start trading a single structure that mines the premium seller's edge, simplifies, and is hedged. The system is built around a single structure, a hedged broken wing butterfly placed out of the money. And this gives you delta and gamma neutrality while keeping your T plus zero line flat and forgiving. Now, the structure also needs to be long VAMA in case of a crash. And the structure needs to balance a hedge with the option premium seller's edge for income. Next, I'm going to give away the exact trade structure that I use to trade hundreds of thousands of dollars. Now let's break down the core components of the AMP 122 structure, focusing on strike prices, widths, and deltas. So the upper long, buy one put at the minus 30 delta. The middle short, sell minus two puts at the negative 18 delta. Lower long, buy two long puts at the minus 3 delta. Now, the PL5 Pro trade structure is a out of the money broken wing butterfly that's hedged and it's long VAMA. So this trade had a small window to capitalize on this crash here in August 5th of 2024. And I was able to extract 8 times my normal profit target. And here's the equity curve for the PL5 Pro, which delivered nearly 8% gains during the market crash of August 5th, 2024, unlike other premium sellers who faced large losses. And to be clear, this reflects the entire portfolio, not just a selective cherry pick of wins. And you can see being long VAMA really pays off. If you want a safer way to sell premium, one you can actually follow, don't just put on a bunch of traditional option selling setups. Start using a rules-based system that keeps you safe through chaos and consistent through the calm. Use a system that's simple, proven, and repeatable. But don't take my word for it. At this time, you might be wondering, can this work for me with real money? So let's pull back the curtain and let's take a look. I get it. You've been burned before. You've tried the so-called advanced option selling strategies and then blew up. You've followed expert setups that worked for a week or a few months, and then volatility spiked and they failed miserably. So it's natural to ask, could this really work for me? Now, I used to think success in options trading came from knowing more option selling strategies, more indicators, putting on more positions. I was the guy juggling 20 different trades in 20 different directions, always reacting, never in control. It was like trying to win a chess match by playing 20 games at once. I was stretched too thin, making mistakes, and getting punished when volatility hit. But then I saw what consistent traders actually do. You don't need to trade more, you need to trade smarter. Success doesn't come from knowing more strategies, it comes from mastering a single, highly efficient one. That starts with a simple, hedged premium selling structure that's been back tested, forward tested, and proven with real money. One that runs on clear, black and white rules that's easy to implement. And a great solution that I've found, the hedged broken wing butterfly. It's one of the most efficient structures to apply this approach and stay protected in any market environment. And if you're thinking that sounds exactly what I've needed, how do I start? I've got something special for you. And this is one of my systems. It's not the same trade structure, but it's a strategy I've been trading for years, built on the very guidelines I've been walking you through in this video. For a limited time, you can get access to the full Safe Whale Masterclass, the step-by-step approach I use to outperform the S&P in Q1 of 2025, and you'll get lifetime access, weekly coaching, and a flow chart that walks you through every move. It's normally $495, but right now it's 100% free. Click the link in the description and start building your crash-proof income strategy today.